Welcome to Banking Transform, the top podcast in retail banking. I'm your host, Jim Marous. Despite having accumulated vast amounts of customer data for decades, many financial institutions still struggle to effectively harness this information for strategic advantage. Legacy systems, organizational silos, and competing priorities often leave valuable data isolated and totally underutilized. Meanwhile, the rapid advancement of artificial intelligence and machine learning technologies has created both immense opportunities and significant challenges for banks and credit unions trying to keep pace. I'm joined in the Banking Transform podcast by Lee Wetherington, Senior Director of Corporate Strategy at Jack Henry & Associates. Lee has been at the forefront of helping financial institutions navigate these complex data and AI challenges. Lee also provides an insider's perspective on Jack Henry's recent alliance with Move. Financial institutions possess vast troves of customer data, but often struggle to transform this information into actionable insights and personalized experiences. Our conversation will explore the critical barriers to effective data utilization, including legacy technology, organizational silos, and even cultural resistance, while offering practical frameworks for banks and credit unions to evolve their data capabilities. So, Lee, before we dive into the specifics of data strategy, could you share a little bit about your background and your role at Jack Henry?
Yeah, Jim, I eat research and poop insights. That's about as short as I can get it.
I love it.
Practically what I do every day as the generalist on our corporate strategy team is I ask three questions, and there's never a never-ending static answer to any one of these three questions. One is, what do we know now? What can we know definitively today? And then inside that, of those answers, we get to that question, which of those things are most durably predictive? And that helps set up answers to the second question, which is, what does the most probable future in a 3 to 5 year frame look like? And then once you get to a fairly concrete answer to that question, you get to the really juicy one, which is, how do we want to be positioned in that most probable future to help our banks and credit unions win in that 3 to 5 year frame? So given the topic today of data strategy, AI, et cetera, all of that is at the foundation of what the 3 to 5 year future looks like, and what you need to do to be positioned to win in that same frame.
Well, it's interesting. You've been in the financial services industry for quite some time. You've been at Jack Henry for 15 years, and you've seen a lot, and we've both seen a lot. I've been in the banking world for my whole career in one way or the other. What is your perspective on the current state of data utilization in banking? Are most institutions effectively leveraging customer information, or aren't they?
No. No is the short answer to that question. And that's been the answer for quite some time. And that is a function of a lot of things. First, it's a function, I think most often what you hear in our circles where we travel is, hey, this is a function of infrastructure fragmentation, of data being siloed in this product, in this particular data silo or database over here, and then there's a separate silo with different data over there, and it doesn't all come together. It's fractured, it's fragmented. You can't, it's not all together in one place, it's not cleaned, it's not normalized. You can't access it in real time. You can't therefore feed it to either machine learning or different generative AI models for now is what the discussion is on different use cases there. So the answer is an emphatic no. The other reason, however, that I don't think data and data strategy has been even a phrase I've heard mentioned. This is anecdotal, but I'm in a lot of boardrooms, year in, year out on both the bank side and the credit union side. You rarely ever hear the phrase data strategy. And I think that's because until AI has really forced the issue, really forced the industry to back itself into getting serious, sober, and smart about data strategy, it's never been, even though we would say, yeah, we're kind of scattered and we're fragmented and we're fractured, there's never really been a time before this era that we're in now, where if you don't have your data house together, if you don't have a clear data strategy, being behind in the era of algorithms and AI means that you're not just a little behind, you can be existentially behind. That is terminally behind. And so that has put pressure on every bank and credit union to really have a coherent approach to data strategy, and more specifically, what they want to accomplish with the use cases that data will drive in a meaningful time frame.
It's really interesting from my perspective as well, and I agree with you totally that there's so much opportunity, especially in the digital world. When everything was in computers and on paper and on spreadsheets and all that, it really wasn't as usable, as understandable. My son's in data analytics, and actually his biggest job is to make it so you can actually see the data work. But still the biggest challenge, the biggest barrier in my mind is while we may know everything about our customers, we don't necessarily let them know we know them. In other words, we don't deploy it. We don't utilize it very well. We do that pretty well and have to on the risk and security side, but not at all when it comes to the experiences, as we talk about, or the engagements. And it's frustrating because until you deploy that data, until you democratize the data across the organization and let other people see it who had to either never saw it or had to ask the IT department for it, and it was always delayed or outdated, we really miss everything. And you bring it up. The fragmentation of data across different silos is a challenge. However, I'm now calling it more than anything else an excuse. Because firms like Jack Henry and many, many others will work with you to bring these data elements together to make it so you can actually utilize that data and actually take it to market. So what practical steps can banks take to break down these silos, stop making them as an excuse, and create a more unified view of the customers? What are first steps?
Yeah. So let me mention something. We see data at the foundation of everything, and that's not a new revelation. And so that's why we've bet the entire farm on modernizing the entire tech stack underneath the banks and credit unions that we support. That includes and actually is very much focused on modernizing the data infrastructure for the purpose of bringing data together, for enhancing the ability to integrate anything at any time and make it available to anyone for any purpose or use case. We worked hand in hand with Google and GCP to build something called the Data Hub, and the Data Hub is basically the liberation of data from all the silos, at least those that we have inside of Jack Henry. So if you think about, we've got core data over here, payments data over there, digital platform data, and another place. What we've done is we are now feeding all of that data into this data hub. So the financial institution, the bank or the credit union, has one place in which all of that data is being pipelined in real time. And from there, you can do whatever you want or whatever the bank or credit union deems strategically important to do, including opening that data or subsets of that data up to partners of choice, fintech partners, et cetera, et cetera. And that, that to us was a very important first real building block for being able to play meaningfully, strategically, and in a timely way in this new data era.
So, we're talking as an industry a lot about personalization. I tend to see data, as I mentioned earlier, being used a lot more for efficiency and back office effectiveness and risk and fraud more than really towards personalization. Yeah. What specific data capabilities do traditional financial institutions need to develop to remain competitive in an environment where fintech firms, big tech firms, my local grocery store, my local food market, my takeout food place, all are using personalization quite effectively? Yeah. What do traditional banks need to do to be competitive in an environment where the consumer's expecting you to know them, understanding them, and reward them?
Yeah, well, this gets back to your first question, Jim, which is that not only is the data fragmented, but even if you put it all together, if a given bank or credit union puts together in one place all of the data that it has, let's say, on a given account holder, they still do not have anything close to a full picture of that account holder's financial behaviors, preferences, payment modalities, patterns, et cetera. This is a really big blind spot, and I think this is the biggest challenge in putting together, or one of the things that you come up against at the front end of really doing data strategy in earnest, is that you realize that you only have a very small fraction of any given account holder's total financial data. And let me actually give you a data point on that. We worked with Bank Director and FinX Tech last year to ask this specific question, to ask banks and credit unions, how much of your existing account holders' financial data do you think you have, right? And the biggest segment of responses on both the bank side and the credit union side said, we think we have between 25 and 75% of our account holders' total financial data. And I will tell you, that's delusional. They do not have anywhere near 25 to 75% of their existing account holders' total financial data because of financial fragmentation, because of the fact that average American has relationships with 15 to 20 service providers. Average smartphone has average 14 financial apps on it. And that is not fully understood, appreciated, much less measured by the average bank or credit union. So when you start getting into really beautiful, strategically sexy things that you want to do with AI, whether it's efficiency use cases or fighting fraud in real time or even hyper personalization, you can't get to meaningful personalization if you're making assumptions about an account holder based on 20% or less of their total financial data, which is what I would tell you the average bank or credit union actually has on hand. That data deficit is the biggest single impediment to meaningful personalization by banks or credit unions now in this era.
It's interesting. And, I bring this up in a lot of my podcasts, is that I'll get in front of 200, 300 bankers, and I ask, how many of you have closed your primary financial relationship in the last 5 years? And almost nobody raised their hand. Mind you, it's a biased audience of bankers that work at the place where they probably bank. And so the people that have probably changed their jobs. I then ask, how many of you have opened a brand new financial relationship at a non-traditional or an alternative financial institution in the last 2 years? And everybody raised their hands. I said, look around the room. This is the silent attrition that you're being lulled into, where you think you know everything about your best customers, when reality is they may be simply you, as Ron Shevlin would say, simply using it as a money warehouse. Basically, it's just a storage place. It's not really where the transactions go. I also look at the fact that few institutions still look at money movement to see where money's flowing in and out of outside the organization to understand their behaviors.
That's right.
How does Jack Henry, how do you as a person help your clients manage data better and build a better data strategy?
Well, that very question is what drove us beginning about 7 years ago to get really aggressive and to be the first major technology service provider in the financial services space to plumb fully into all of the major financial data exchanges, right? Finicity, Plaid, Akoya, Yodlee, MX, Intuit, Stripe, even. And so we were the first to get fully plumbed into the open banking ecosystem in the United States, because we knew the only way to plug the data deficits we were just talking about that banks and credit unions have on their own account holders is to fully lever and lean into standardized API-based open banking rails to set up the infrastructure by which those banks and credit unions can ask their account holders for the permission to bring this fragmented data back to the bank or the credit union. That is, in our parlance, what we would call getting to first app status. So we are not of the opinion that banks and credit unions are suddenly going to convince their account holders to get rid of the 13 financial apps on their phone and only have one. But First App is the app that helps make sense of what's going on across and in between all those other apps, and giving you one pane of glass at the bank or credit union, preferably, to make sense, to make meaning of that, and from that to know what to do next or how to do better. And this gets to the hyper-personalization you were talking about. It's only when they get a preponderance, at least a preponderance, of my total financial data from all of those disparate financial apps and providers back to bank or credit union that they then can begin to analyze or run models or feed into models behavior, my fuller set of data to be able to recommend to me something that's meaningful. I mean, I tell banks and credit unions, don't dare try to begin having some kind of automated capability for recommending next best product or service to your account holders if you don't have the full picture of what they have and don't have. If I'm recommending to Jim that, hey, Jim, I noticed that you don't have an emergency savings account. And Jim's like, what are you talking about? I do. I just don't have it here. And therefore, you don't see it and you don't know about it. Now you're just wasting my time. And not only that, you're revealing that you're verifying that you don't know who I am, which now impacts trust, reputation. We could go on down the line. So to answer your question, what we did is we plumbed in early to the open banking ecosystem. We negotiated first of its kind pricing with Finicity to be able to make it cost effective for an average bank or an average credit union to do API-based aggregation back to bank or credit union. Because, by the way, before that pricing, it was not doable from a budget standpoint for an average bank or credit union to offer that. Now we're getting into the era of 1033, of the personal financial data rights rule. And I think the art it's not the science so much, but the art and compliance of permissioning a la 1033 means that the winners of these data wars that we're in, by the way, in case our listeners don't understand it, we are in full out data wars right now.
Yes.
The entities that ask first and ask best, and those entities that can lever their trust, if they have that in place, to get yeses when they're asking first and best, to aggregate data back to bank or back to credit union so that is home base for all of this otherwise fragmented financial behavior. Those are going to be the winners. And that to me is really as interesting as all of the other technology questions and issues we can talk about in terms of AI, infrastructure, use cases, et cetera.
So Lee, you have all these major tools available for your clients and for prospects in the marketplace. You and I both know that even though you can show everything you can do on behalf of the financial institution, not everybody says yes. I'd even go further as to say the biggest obstacle to implementing an effective data strategy goes beyond the technology. In other words, behind the scenes, and more important than even the machines that make this happen, there's other things that get in the way. From your perspective, why do organizations hesitate from moving forward when you have the tools to help them move forward? What are the things that get in the way from your perspective?
Well, I mean, historically, we've always had the baseline hesitation and constraint around regulation. Until 1033 was finalized by the CFPB just last October, we did not have a clear set of coherent rules around open banking, about financial data exchange, et cetera. We also, by the way, still don't have a clear and comprehensive set of coherent rules or regulations or guidance even around what's okay and what's not in terms of AI, different kinds of models, data ingestion, data output, et cetera, et cetera. Now, we have other rules and regulations that impact and obviously inform and are explicit about what is okay and what is not okay in terms of personally identifiable information, et cetera, et cetera, et cetera. But regulation has been a constraint. Now, the interesting thing to think about where we are is we are in the middle of the current administration, having a full-out assault on the regulatory infrastructure in financial services. It went after the CFPB first. Now there's talks of trying to consolidate the FDIC, even maybe the NCUA into the auspices of the OCC, et cetera. So there's all kinds of, there's not only deregulation right now, there's regulatory upheaval and chaos. So the question I would pose strategically, all of that is another way of just saying disruption. We're in a window of disruption in financial services. And it's good to remind ourselves that in every window of disruption, our inclination is to focus on downside risk and forget about the proportionate upside potential. And that's what we're looking at. A lot of people right now, seeing what happened to the CFPB, a lot of folks said, you know what, I don't know what's happening with the CFPB. I don't even know if there's going to be a CFPB. And therefore, they think maybe all of the CFPB's rules are also on ice or go away. No. If a CFPB rule like 1033 has already gone into effect, which it did, by the way, on January 17, it carries the weight of law. It would take an act of Congress literally to rescind that rule outright. Some people say, well, hey, Lee, that might happen. No, that's not going to happen because 1033 actually enjoys fairly broad bipartisan and bicameral support. I say all of that to say, one way of reacting to chaos and upheaval is to sit on your hands and say, I'm just going to wait to see how this plays out. Meanwhile, the winners of the data wars are going, oh, goody, goody, you're all distracted. We're going to lean in, fine tune our open banking plumbing, get serious about asking permission, not only for the narrow set of consumer financial transaction data that's within scope for the CFPB's 1033 rule, but for data way outside the scope of that rule. Because if we go ahead and build the infrastructure and the permissioning and the aggregation to open banking rails and all of that to make that a reality, that's exactly how we win the data wars, is by bringing the most data back to bank or credit union with which to do any number of things. Improve real-time fraud detection and prevention, yes, but also to get to those more juicier hyper-personalization use cases that you were talking about just a moment ago.
You know, it's music to my ears. It gets so frustrating for me. I've been in the banking world forever. I've heard larger financial institutions say, in many cases, we'd rather beg for forgiveness than ask for permission when we know that we're doing things within the confines of what the regulations meant to say. It doesn't always specifically say what we would love it to say, but right. Bankers get in their own way because they make the excuse, well, we haven't been given the specific authority to do this. At the same time, as you brought up, all the data-driven non-traditional financial institutions and even some traditional ones are saying, no, we're well within I've used the example of the signature cards. You know, we thought we had to have signature cards. Then all of a sudden somebody came up with the idea, no, we just have to know our customer, which is a whole different realm you're looking at. And in the digital world, especially when you're, in many cases, getting permission-based data usage. So if the client says, yes, I want to bring these other accounts into the realm, you're not doing anything illegally. You're doing everything within the confines of what Uber does, what Amazon does, what all these other companies do. I get frustrated because a lot of legacy leadership really wants a complete go-ahead, and they'll never be comfortable, which is why we have people starting new account opening processes still with driver's licenses as opposed to all the digital information that's out there that can help the customer do things faster and easier. We get in our own way too often. And you put it so eloquently in the way you described it, because we can't keep on waiting for permission if we know what we're doing is not pushing the edges yet. We got to do the basics right.
That's exactly right. Let me point out another really interesting irony about where we are. And this goes under the category of careful what you wish for, or more specifically, careful what you vote for, right? So, nobody loves the CFPB in our circles, at least in the credit union banks.
Right.
Nobody likes the CFPB. There's all kinds of examples of overreach, and we won't get into that.
Right.
But careful. If you want, the CFPB was the only federal regulator beginning to really bring hard scrutiny to bear to non-chartered financial service providers. The ones that you're talking about that have been behind the silent attrition and eating the lunches of banks and credit unions, often without the banks and credit unions fully realizing that's going on. The CFPB set up shop in a lot of those biggest providers. And then we had the change in administration, and now the attack and the gutting of the CFPB. Okay, great. Guess what that's doing? That is making the playing field even less level now between chartered providers and these non-chartered financial service providers that they're competing against. So do you think that those non-chartered providers, given the new latitude and freedom that they're having because the CFPB is being attacked by the current administration, do you think that they're going to let up on the gas, or they're going to press the pedal? They're going to press the pedal. And so you've got to go all the way out to see these unintended consequences and effects of things you probably hoped for, dreamed for, and voted for. And now you've got these downstream effects that you didn't necessarily anticipate. We also thought that, we're not only going to have a strong economy, lowering interest rates, continuing lower inflation, we're getting now the opposite of that. Right. And so you've got to take all of this stuff into account and then strategically ask, what opportunities does this create, instead of sitting on your hands and saying, let's just wait until the dust settles.
Well, you and I have both been in the banking industry long enough to know that being a fast follower or waiting to see what happens is not very good in a marketplace that is disrupting on a daily basis. The reality is the consumer wants personalized experiences. They want their financial institution to show empathy in helping them manage their money better. And they're willing to partner with that if you give them value in exchange. Now, the problem with the industry is I remember the old stockbrokers that used to take this long, 18-page diary of what my life was like and then put in their side drawer and never have access to it. The reality is the digitalization of data has made it so anytime we collect information, the client knows and expects us to use it for our benefit. If we don't, then we lose that leverage. I use the example that my personal financial institution knows more about me than I probably know about myself, but they never show it. And therefore, they never take any action toward the fact that I have a car loan, a mortgage payment, an investment services account, a savings plan with Acorns that takes money and makes it flow in and out of my traditional financial institution for the benefit of my financial wellness. Doggone it, help me with that, my financial institution. You have that information, and the client now knows you do. When Uber can provide a very customized relationship with me on my way to a hotel, tell me where I can buy food, where I can go out to dinner, what things I may want to do outside of the hotel. And yet my financial institution can't even tell me how to save my money better or how to get a better interest rate than I'm getting currently, because they have all the interest rates I'm paying and everything else. You're breaking that trust. One of the things that Jack Henry's done over time, and I've been watching you quite closely, is you continually make these partnerships to make it so that you can bring more to your client's relationship and, in effect, bring more to their customers and members. One of the things you've done recently is you built an alliance with Move, which really made a lot of waves in it with its open source payment processing capabilities. Can you explain a little bit behind the strategic thinking behind this alliance and how it fits into your broader vision at Jack Henry?
Yeah, this is a data strategy play. I just tell you straight up, this is a data strategy play. And I mean that from the vantage of the bank or the credit union.
Yeah.
You know, we talked about earlier how banks and credit unions don't have all of the financial data on their account holders, but they're not, to your point, as you just were talking about, they're not even necessarily acting on the data that they do have.
Right.
They're not using it. They're not leveraging it. They're not, figuring out how it can bring value proactively to the account holder. And so it turns out that sitting in the core of every bank and credit union in the country is all the data that you need to automate approval of what historically we would have called a merchant account application. So just to give a little history on this for everybody who doesn't necessarily track this closely, but 10, 15, 20 years ago, that was that process of applying for a merchant account with a bank. And by the way, there are only a subset of banks that would provide merchant services, right, depending on how far back you go. That process would take maybe 2 weeks, and you had to provide a lot of data. You had to provide transaction history and balance histories and creditworthiness tests and all this other stuff to get approved for a merchant services account with a bank that provided that. Then we got to the era of the PayFacs, right? So we talk about Square, the dongles, et cetera. And so what did they do? They said, you know what? We'll have a master merchant services account with a bank, and then we'll just do little sub-accounts off of that internally. We don't have to ask the business for as much information, and we can do that online. And now we'll get you that approval in 2 to 4 days rather than 2 weeks. What we realized is that the banks and credit unions have the data to automate instantaneous approval for merchant account services for existing customers that they have in their banks and in their credit unions. So why not do that? Why not now go into an era where, forget the PayFac era of 2 to 4 days, you can get approved right now at a click. And because your smartphone is now, or an app on your smartphone, specifically the bank or credit union's mobile banking app, can be the point of sale device for accepting payments, you can now click to begin accepting payments and literally begin accepting payments instantaneously. All right. Now, moreover, because of advances both in technology infrastructure and in real-time payment, that is real-time money movement, if you put all of this together, banks and credit unions have the ability to offer micro and small business owners the ability to begin accepting payments from scratch, doing it right away. When they accept those payments, getting the funds for those payments in near real time, or at a minimum same day, which is also a revolutionary. Instead of taking payments by card or whatever, and then 3 days later or 7 days later, you get a wire for one amount for all of that, and you've got to reconcile that back to all of your individual payment, card-based payments that you accepted. Well, we also realized, wait a minute, what are you reconciling to? You're reconciling to your bank information and to your to your accounting system, whatever you're using, and maybe QuickBooks or Xero or whatever the case. Well, we've got all the APIs for all that. So why not just also automate reconciliation so that you get to continuous real-time reconciliation, so that the average business owner is no longer spending 10 to 12 hours a week trying to reconcile a batch wire for transactions that happened 3 to 7 days ago.
Yep.
Now you're cooking with gas. This is what I call a really powerful example of data strategy. How can you lever the data you already have in your bank or credit union to do something truly new, different, and material in terms of value, both in saving time, saving headache, and allowing the average micro or small business to focus on their business rather than trying to play accountant when none of them have the time nor the expertise to do that. We realized in working with Move, we put all of that together. Here's another little thing, Jim, that we don't talk about very often. Move is built on public cloud architecture in Google and GCP. Everything that we're building, the entire tech stack from the core up that we've been rebuilding inside of a public cloud infrastructure on GCP, basically, we're both in GCP. So I want you to think about this for a second. So we can do things, we can get to speeds of money movement by both being in GCP that are otherwise not possible. And second, don't require us making hops on the public internet to make those money movements between accounts. So now we're not just fast, we're the fastest.
Yeah.
And so that's a result of having modern infrastructure and using it in strategic ways to be able to bring new value, in this case, to small and micro business owners. Here's the other thing. In terms of you mentioned payment flows and your son being in analytics. The first thing any bank or credit union should do is they should understand who exactly they're serving right now inside of their bank or their credit union. And when they do that, using basic payment flow analytics, this is not AI or machine learning, it's basic analytics, they would find out that 13 to 35% of their retail checking account holders are actually micro and small business owners.
Right.
A lot of these are Gen Z with side hustles, independent contracting, all the rest of it. People, I don't think, realize we're now at 5 million new businesses being formed every year in the United States. A lot of that is driven from Gen Z and their understanding of what it means to have a side hustle or to be a small business. And banks and credit unions can serve that kind of client, that kind of account holder, customer, or member all day long using data that they already have if they just wake up to what they have, how to leverage it. And by the way, once you do that, why not ask that small business? By the way, this is an interesting question. If you've got a small business owner who is presenting as a retail checking account holder in your bank or credit union, you can ask them to permission to aggregate back to that bank or credit union much more, again, than just consumer financial data. You can say, hey, why not plug in, why not permission this API to your accounting system? And through that one permission, get access to everything that particular business is doing. And also you will see through that what accounts they have with other service providers at the same time. It's all about on and on and on. So I'm going to stop here, but
it's getting
that's why we did the move with move without.
Well, it's interesting because it also is looking at new data sources, new utilization of data. It's again the actual deployment of solutions. Jack Henry for years, since the beginning of my time, has really specifically served community banks and credit unions. That's been your sweet spot. At least that's what I've known you as.
Yeah.
You also move on a dime, and you understand probably better than anyone else in the marketplace the value and what community banks and credit unions can do now more than ever. 5 years ago, a community bank or credit union would have an almost impossible time keeping up technology, innovation, new products, new services, new experiences with the big guys, be it doesn't even have to be that big, because it costs so much to keep up. But because of solution providers across the board, yourselves being included, but so many others that now have compartmentalized the ability to innovate at speed and scale, not only are the small financial institutions able to change things almost instantaneously. I mean, back in both of our days, you had an annual plan because it took a year to do anything, and you'd never get there. Yeah. There's a major advantage now, I believe, between community banks and credit unions in competing in the marketplace where they can actually overcompete, over-deliver what I'm going to call the mid-range financial institutions, those of number 10 to number 3,010, because they can move so quickly. What other advantages from a data strategy standpoint do community banks and credit unions have that you really answer to, but really puts them at a place where they can compete eye to eye with the Chases, the Wells, the Bank of Americas, and the U.S. banks?
Well, this is what we would call enabling banks, credit unions to punch above their weight, and it organizes everything we do. First, we realize, practically speaking, that a lot of the banks and credit unions that we serve are never going to have a data science team. They're never going to build out, a team of AI engineers, be able to attract that, et cetera. So they're really relying on their primary sort of tech stack provider to give them these capabilities. And we are absolutely convinced that we can with the new tools, whether it's machine learning that's been around a long time, it's the new generative AI models that are coming. By the way, I want to talk to you about what's coming on AI, because I think that also informs this question. But we think that we can have a new golden era of relationship-based banking based on efficiencies that free up banks and credit unions to do more with the same. That is, specifically the same people. In other words, we see AI generally as a tool set that makes, basically gives an iron. This is my Keith Fulton, our new chief data officer, says it this way: it's giving everybody a suit, an Iron Man suit.
Yep.
Right. So that now you can, in terms of productivity, in terms of efficiency, you can do orders of magnitude more at the same time that you can focus more qualitatively on the things that AI and machine learning and nothing else is really good at, which is relationship building and relationship deepening. And so that's the way we see AI. If you look at what's coming, so I want to go ahead if it's okay for me.
Actually, that was my final question, was to ask you to look ahead and what excites. It appears you have no lack of passion. I was going to ask what excites you about banking, what's going to be coming down the road. It looks like everything does, but what, from your perspective, what's exciting on the horizon?
Okay. First of all, what's exciting for me is AI is the UI. So the ability, we talk about back office as if it's like this one thing, and it's not. It's this terrible patchwork of the back ends of 15, 20, 30 different systems. And sometimes you've got to be logged into 7 or 8 of them just to track down and resolve one moment of need for a customer. Think about all of that going away with a unified back office that ties together all of the administrative back ends of those systems and providers and partners that you rely on, so that you can just, literally, with like a chat GPT interface, just ask the system a question, and it gives you a definitive answer. Now, eventually, it's not only going to be here, but it will be 100% correct 100% of the time. This leads to what's coming up in AI. What I'm most excited about, and what doesn't get talked a lot about in our industry, is the growing size of context windows in AI. A lot of us are still focusing on the sheer size, the parameter size of models, right? Yeah. And you see these different models, topping each other in terms of parameter size. That is not where it's at. The models with the biggest context windows, when I say context windows, that's literally what you're typing in when you're typing in something to ChatGPT. But instead of thinking about that, I can just tell ChatGPT what I want or ask it a question. Think about copying and pasting into that chat, that window, that AI, an entire novel, and just say, now, tell me everything I need to know about this novel, with the focus on this or that, and it can do that. Think about that now. So you start saying, wait a minute, what are we talking about here? So what you need to be focused on going forward is the growing size of context windows. Google's latest Gemini model has a 2 million token context window, which is to say, if I'm doing my math right, that's 20 novels. That's 20 novels that you can just put in that window, and that is in its short-term memory, and it can be definitively accurate about anything you ask it about those 20 novels. Okay. There is also another a model out there that now has 100 million token context windows. That, Jim, is 1,000 novels. Now, when you start getting to those kind of scale points, we're very quickly going to get to the point where the average bank or average credit union could put all data it has into a context window.
Right.
Now, if you don't know what that means or what that implies, I would tell you, you're not going to get it in the next few minutes from me. But I just think about dumping every single piece of data you have into a short-term memory of a model that can definitively answer with 100% accuracy, 100% of the time, anything about the data set that you just put into that context window. We're going to be there. We're going to be there pretty soon, and it's really, really exciting. We talk a lot about agentic AI, so I think that's being covered pretty well in the space. It's really exciting being able to have something that's proactive, can take action.
it's a version of what you're talking about, because the reality is
Yeah.
that contextual insight that you're talking about, that the ability to do that for each customer in a way that is highly personalized, but adjust based on the person's life, adjusting from yesterday to today to tomorrow,
Yeah.
makes it so without taking many risks, a financial institution can
Exactly.
say,
Which is
based on
exactly what we want to zero out.
right,
Right.
based on what you've told us,
Yeah.
based on what we know about you and your relationships,
Yeah.
based on what's expected to happen tomorrow, we can act like that GPS system that says, get off the road right now, take the alternative route. It doesn't seem faster, but there's something coming up that you want to avoid. And I'm going to get you to your destination faster than the traditional way of doing things. That's all the customer wants. The customer wants their day to be easier. They want to take some of the burden off. They don't expect you to be perfect. Yes, so we all know that. I was in the branch system, and we would complain about something, and main office would shut down a marketing program because of 7 complaints among 70,000 customers we were serving. That day is going to be going away, but the power of these tools, the power of Gen AI, the power of learning models, the power of just the dialogue. When ChatGPT first came out, everybody said, "Oh, this is not very smart at all." And then you realized after playing with it a little bit, no, I was the person who wasn't smart. I was asking it the wrong things. It's the prompting tools. But the ability to adjust over time is the real power. And I think, AI moving from the back office to the front experience. Now, the biggest question though is, and this will be your last question, Lee.
Okay.
Will financial institutions be willing to take that step? Because just because we can doesn't mean the industry does or will, because we find excuses not to change the way we've done banking forever, because none of us are going out of business. We may not have great years all the time, but when things are going okay, you don't want to get in the mix of saying, why change things? The bottom line is, will they actually take the ability and do something with it?
I think they will, because when they see that this reinforces and turbocharges and amplifies the humans in the loop. It doesn't take the humans out of the loop. It gives superpowers to the humans that are in the loop.
Yep.
And that is another way of saying this is relationship banking on steroids.
Right.
Is what this is.
And by the way, given to everyone from the call center employee to the branch employee to the private banker to yourself. So if I don't use anybody,
I think once they make that connection, that this is not replacing them, that it is giving them superpowers they've never had before to do relationship banking at a level of quality and scale never before possible. They will not hesitate, because they know it's ultimately, finally curated and arbitered by the human beings serving the human beings. Yeah. I think your community banks and your credit unions get on board. And the exciting thing is that as we see in the next 3 years, the convergence of these context windows that become functionally unlimited in size, with agentic AI, which is the ability to have an AI drop somewhere, understand its environment context, and act on that. But you've got to have integrations to do that. And then that all gets us to both text to action and speech to action.
Yeah.
I mean, holy cow.
Yeah.
We're in a whole different world.
Yeah.
I'm trying to figure out what my job means in that context. Right. Jim, I know you're trying to figure out what your job's going to mean. I mean, if by the way, I'll leave everybody with this. If you want to get a taste for why I'm excited about this, Jim and I just released, for free, by the way, its deep research engine.
Yeah.
Go out there and just try it once. And then, give yourself 3 weeks, and then I'd love to hear from you to see if you can make sense of what's going to happen.
I go the same direction with perplexity. I'm amazed. And then every day it gets to be something different. Like ChatGPT now is going to be able to adjust pictures in different styles. And it's crazy, but you can't stop learning this stuff. I leave everybody on my side saying, I am an advocate of continuous learning, of ongoing learning, because what is coming up, you need to take learning as part of your day every day, because it's happening that fast. And if you get this much it's that much more than the person next to you. And sometimes it's not if you can outrun the bear, it's if you can outrun the person who's being chased also along with you.
That's exactly. So you can eat and you can respond with fear or excitement, and excitement is what will drive that day-to-day learning. Get excited about it. It's crazy. It's fun, and lean in. Yeah.
Lee, it is always a pleasure to have a guest on who has the enthusiasm, energy, and passion for what they do the way you do. I will guarantee you we're going to be doing this again. This is a blast. I appreciate you sharing with our audience what's possible, not to put things in your own way that are fictitious, or at least in our own minds. Not fictitious, they're in our own minds. We need to embrace the change. Lee, thank you so much for being on the show today.
Thank you, Jim.
Thanks for listening to Banking Transformed, the winner of 3 international awards for podcast excellence. If you enjoy our work, please give us a positive review. Also, check out my recent articles on the financial brand and our fantastic research for the Digital Banking Report. This has been a production of Evergreen Podcast. A special thank you to our senior producer, Leah Haslage, audio engineer, Chris Fafalius, and video producer, Will Pritz. If you have not already done so, remember to subscribe to Banking Transformed on both your favorite podcast app and YouTube for more thought-provoking discussions on the intersection of finance, technology, and leadership.